This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Monday, February 23rd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at March corn down 3/4 at 426 3/4. March soybeans were down 6 1/4 at 1131 1/4, and March Chicago wheat was down 3 at 570 1/2. This morning we had an export sales announcement: 125,000 metric tons of corn sold to Colombia, and that was for 25. We are also through 14 of 19 settlements now for our spring crop insurance discovery period. Corn is currently averaging 460. That's unchanged from Friday, from our last settlement. And soybeans are at 1103. That's up a penny. So we will be finishing that up here this week. Good morning, guys. Hope everybody had a good weekend. Before we start, one thing I wanted to mention, you'll notice in the comment section, the enrollments are now open for our national scholarship competition, the first annual AgYield NextGen Foundation scholarship competition. We've talked about it a couple of times here, but March 27th is the deadline. Be sure to pass it along to any folks that are currently enrolled in an ag-accredited university with an ag-focused major. It's going to be awesome. Use the AgYield simulator. We're going to go through a 6-week simulation and compete for a grand prize and multiple other prizes along the way. So for scholarship dollars, please enroll. And if you've got any questions or need more information, please don't hesitate to reach out to us. But you can click the link in the comment section, and that'll get you signed up for the competition there. So that's going to be really exciting. Guys, as we transition here into the markets, obviously a lot of tariff news back and forth, still trying to figure out what's going to happen here, whether it's going to be between 10%, 15%, what he's going to do there. We're grinding into first notice day, and we're going to have our crop insurance price here by the end of the week. So a lot going on, a lot of decisions to be made here. Dustin, why don't you kick us off for the week on things that are on your mind, and then we'll throw around the room.
Yeah, thanks, Dan. Yeah, obviously a lot of things happening right now in markets in general. Wheat has been very strong recently. I think that's a sign that we're able to stay up on flat price on corn as well too. Yet we're still getting a lot of cues that there's a lot of old crop pressure on corn. So corn's been fairly weak to other products like wheat and soybeans. And even though the flat price is still hanging in there, spreads have really started to collapse. And I think that as far as near term, just directional expectations, watch into Wednesday and Thursday. The last days prior to first notice day will be when we have to roll, when a lot of basis only contracts need to roll. And that may be pressure on more on the spreads than flat price if more growers are rolling, but it could also be a sign of the hangover we have of bushels that need to be sold. So I think beyond all of the measurements that we're doing for new crop, hedging, measuring against potential farm bill payments in 2027 for the 2026 farm bill, or PLC and Art County decision in 2026. My focus is still going to be near term, going to be making sure old crop risks are covered and trying to estimate what that carryover will mean for new crop. Is that going to be the poison pill that we just have excessive supply there? It certainly changes the way I think about hedging. There's always that chance that we have a weather event this summer and the prices go higher because of it. But if we have a 2.4, 2.5 billion bushel corn carry in into the 2026 season, what are the chances of a pre-summer high, like a seasonal high number? Often we'll look for a 5 to 6% increase. If that is still going to put us into that marginal return area where we're not really making a lot of money. I think a combination of a very strong plan B approach where we're incorporating some sales, some short option collection, and some high level crop insurance policies is going to be needed. And we're going to have to sharpen our pencil for how much we actually need to sell in April, May, June, before we get to that summer timeframe. We have another normal growing season with a 2.5 carry-in. I just worry about what corn's capable of doing again next fall. So we got to kind of, just like I said, sharpen our pencils probably more now than ever.
Yeah, very good. Justin, a lot going on here. I guess, what are your thoughts, and certainly maybe visit them? I mean, the tariff stuff is clear as mud, but I think you made a great point that like they're here. So, I mean, I don't think that's anything we didn't know. He's still got ways to do it, and it feels like they knew that all along. So what are your thoughts?
Yeah, definitely. I think, people wondering why we're not limit down overnight. I think that's the reason. Like this didn't end the tariff thing at all, in my opinion. I think there's lots of different ways they can go about it, and they'll continue to do it. So, countries that try to step away from, things that they've already negotiated, I think will probably regret that decision. China, US meeting, early April.
Yep.
So still going to be a lot of volatility as we go through this. The good news, in my opinion, is that we've kind of ending the month on a rally. So we've helped get crop insurance prices much better than they were looking, a couple months ago. So we've taken a lot of those big, which, clients of ours know, we talk about taking big chunks of risk off the table, and we just did that. So I think with the high subsidy levels of these higher coverage levels of crop insurance, to Dustin's point with Farm Bill, certainly we could have too many acres and get way too cheap, but we're still going to have this background of double to triple floors as we go much lower. So I think it's just really important to keep all that, to be tracking all that and how you trade around these things throughout the year. So what you get now, right, is you're getting bushels to market. When you buy crop insurance policies, when you think about a robust insurance policy, those are just giving you ammunition that if you do have a rally, you can really, unload on it. So I'm on the same page with Dustin. I think to go see, 350 corn, I think you'd have to really, have another massive crop, and Mexico, things like that to really recover on their production and not be importing record amounts. But certainly could happen. I think I'm much more optimistic than I was 45 days ago.
Yeah, well, that's a good, it's a good thing, because it was tough there.
I mean, you're squatting from, squatting low to jump high. I mean, so it was pretty dismal there, but no, it's just nice that, that window of, October through March is always kind of hairy. Just because you have, such little protection. So I think you get through first notice day. My guess is the way that flat price is acting and it's more spreads, that there's going to be more kicking the can down the road. So that could end up being the trade or the trend for every first notice day for the next few in the corn market. If if that big supply is there, which we've seen, many other years too, where you might have, I think once you get past this first notice day, whoever needed to sell it probably has sold it, and it'll be stored away until after planting, until you get to the May timeframe, the May first notice day, and then you might have to repeat that cycle again. But for now, I just want to get past this next couple of days.
Definitely. Ben, first off, happy birthday, buddy. So anybody calling Ben today, let him know it's happy birthday. And I guess, what are your thoughts here as we start the week?
Pretty encouraging. I think that we're going to have a much improved spring price in soybeans, and in corn, it's 2% below what it was last year, which is pretty good considering where we were at with beans. When you look at the big piece of the whole pie for the grain complex, and we kind of transition here once we get through this week. We've talked before in the past about uncertainty, and I think globally, the next 2-3 months is the big uncertain period for grains. You really have to have a good safrinha crop. You have to have a good U.S. crop. Corn global stocks are not super burdensome. I think beans still come down to, do we ship the additional 8 million tons that Trump tweeted about a little bit back? So, we've gone on for 4 or 5 months with knowing that there's kind of a cloud on the amount of grain that we have, and then finally getting the bean, getting some bean business done. Geopolitical trade has been big, or, Trump tweet trade, whatever you want to call it. But now we get into a period where we have actual crop risk, right? Or crop uncertainty. Planting, certainly I think there are some concerns about wheat, very dry out there, and wheat probably greening up a little bit early, and a short that wants to leave. So an old adage for traders is, it's okay to be short vol after the January report until about the 3rd week of February, and then it's typically not a good trade. So I'm hoping that volatility picks up after we kind of get through this week. That we latch onto some production uncertainty, maybe in South America, maybe some planning uncertainty in the U.S. We continue to do good exports. I think we could build a foundation there to kind of hold water. And I do think that mechanically, with really beefed up insurance policies, it's going to delay some offers for a little bit, because I think it buys people, to a certain degree, some peace of mind that they have some protection in place. And should we see a seasonal rally, which we did not get last year, I think it'd be a good opportunity to get yourself squared up and be comfortable where you want to be. So I think we're in a transitional phase. It's been worth noting that we've seen buying, last couple of weeks in corn. They're covering the short position. There's definitely been short covering in wheat, and as of last week, they were still adding to their long in soybeans. So hopefully we continue to see that, and it results in some price appreciation.
I think that is a good, point to bring up there. On this rally, there's not a burdensome position on with the funds. You could argue that the burdensome position might be the massive long in beans now, or in the bean complex. So that is a risk, obviously. It's one thing when there are massive shorts and you're going into growing season, but now you've covered most of that. So there is room to get short for sure if something, really negative were to come out.
And, managed money, they sold heavily the week of the report, and they didn't get any follow through, right? They're going to keep going in the path of least resistance. And we've seen the same, 50 to 100,000 contracts the third time they sold it. This time, I don't think they really have been hurt selling it, but the previous 2 times since harvest, they covered right away. So, commercial buying down here, good value. Maybe that was, just the actual fundamentals saying you can't take this much lower. I'm worried about the next few days, see where we wind up. Interesting to note that on the market profile, as of today, for the month of February, we're actually auctioning higher than we were in January. So that's positive. But yeah, we'll see. Get through. I want Wednesday to Thursday, early Thursday, to be gone and behind us.
Very good. One other thing I wanted to point out, today, enrollment begins for the Farmer Bridge Assistant Program. So that opens up today. You can go to USDA website. I know they've got all the information there. You can click on it with hopes. They're saying that you get the money by the end of the week. So we'll see how fast that moves, anything USDA related, but that has opened up today, and you can enroll between today and then it closes April 17th. So you've got a little time there, but I would be quick in on that deal. Ryland, real quick before we close here today, we had cattle on feed there on Friday, and we finally saw a big drawdown in open interest or managed money, last week in the hogs, down 17,000 contracts. So why don't you share a few thoughts here as we start the week?
Right, cattle on feed report, just kind of neutral, maybe a little bit friendly. I mean, placements came in slightly below expectations. So I think overall it is kind of supportive just based on we were looking at placements at 95.3%. On feed inventory, Feb 1 came in at 98.2. So we're still seeing these lower and lower numbers on feed anyway, with the exception of Nebraska, oddly enough, had a record high on feed count. So we're starting to see this discrepancy between northern supplies and southern supplies. So I think it's going to make things a little bit more interesting down the road here. But overall, maybe overall just seeing it as a bit supportive here. So we'll see how that kind of shapes up here today. But there wasn't a huge surprise on this one whatsoever. Cash trade was higher last week, so still following that trend at this point, 248 to 249 live in the South. So still about $1 to $2 higher, and dressed was about 3 to 7 higher. So packers are still paying higher and higher prices. So I think this trend likely to continue, but to remind everybody, we are in that kind of seasonal, kind of vulnerable time frame. You know, this week is into kind of the first 2 weeks of March, typically not a great time. So I think there is just a little bit sense of elevated risk here, just kind of near term, but overall still kind of projecting demand to pick up as we get into warmer temperatures. And on the hog side of things, yeah, big liquidation from the funds, 17,000 contracts. And I think that was obvious just what was going on in the chart. We weren't seeing the fundamentals really follow what the market was doing. And just overall seemed like it was kind of a disappointing kind of fundamental picture overall, even though we did see cash still hold pretty firm last week, still up over $3 on the week. We just kind of sold off late, you know, just could not hold that big strength like I think everybody wanted to see. So cash coming in $2 lower into the day. So just feels like maybe everybody's waiting for the next headline, what the heck's going on with the tariff situation. But I do think there's still some headline risk here overall in managed money. Even though we've seen a little bit of a recovery, doesn't look like they're coming back to the degree that we saw them before, even though we know seasonally things should start to be picking up here in the next several weeks. So yeah, just kind of wouldn't expect any kind of big trade unless you get some big headlines today.
Very good, Ryland. Appreciate the update there. Just came into the open. We got March corn down a penny here. 426.25 is the last. March soybeans are down 3.5 at 11.34, and March Chicago wheat's down 2 3/4 at 5.70 3/4. Again, you'll notice in the comments, check out enrollment for the our national scholarship competition is open. Need to be enrolled by March 27th. So take a look at that, folks. Check it out. It's going to be a really fun simulation contest, 6 weeks, 6-week sprint to a scholarship. So it's going to be a lot of fun there. Check it out. Also, War Room Report, if you're looking for a deeper dive into the things we talk about on a daily basis. Also, check out the War Room Report. The link is in the comments as well. If you wouldn't mind, throw us a like and certainly subscribe. We appreciate everybody that tunes in on a daily basis. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.